Hi guys, today I'm going to be showing you how to trade the 30-minute Bitcoin chart using trend identification methods. The ideas and strategies I show in this video can of course be applied to any other time frame or asset and should work equally well. With the release of Lux Algo v4, a lot of new features have been added that can enhance a trader's ability to identify and stay in trends as long as possible. Firstly, I'll be showing how to enable two fantastic tools for trend identification. Firstly, I load up the Lux Algo Premium script, then I go into the settings and enable Trend Tracer in the indicator overlay. As I've mentioned in previous videos, the Trend Tracer can allow the user to cleanly and clearly identify trends and can behave as a trailing stop. I will also be enabling the new Taki Ashi candles with candle coloring as none. Taki Ashi candles allow for clear retracement identification as well as filtering anomalies in price action. So how can we use these two tools together? We can use the Taki Ashi candles and the Trend Tracer to create a very simple crossover strategy to identify a new trend. Let's look at the current chart. Here we see the Taki Ashi crossed over the Trend Tracer. Both the Trend Tracer and the Taki Ashi candles turned green. This indicates the start of an uptrend in the market. Over here, we can see the Taki Ashi crosses under our trend tracer. The trend tracer remains green for a short moment and then turns red as the trend is confirmed. If we look closely at the candles at this moment, we can see them knocking against our trend tracer, indicating the price was attempting to break above it and failed. This is a further indication the downtrend will be stronger and potentially longer lasting. Now, naturally, since this is a trend-based strategy, we're going to see it struggle in ranging markets. However, the Taki Ashi can provide a lot of insight into the market's potential movements. Here we see the Taki Ashi candles have formed a higher low and are flush with the trend tracer. This indicates there is a growing bullish momentum and potentially the price could break above the trend tracer shortly. This is exactly what we see a few candles later. The price breaks above the trend tracer and rallies $1,000. Lux Algo has also updated the oscillator, giving a new, simpler and classical feel. I've loaded it up and I'm using default out-of-the-box settings. So, how can we add this into this strategy? The oscillator is based on momentum, so is perfectly paired with Taki Ashi candles. The Taki Ashi candles make identifying peaks or bottoms very simple due to its histogram likeliness. Therefore, what we can do is identify divergences nice and simply. As you can see, I've labelled the two divergences on my chart. This bullish divergence occurs as the candles make a lower low, however the oscillator has clearly made a higher low. And of course, over here we have a massive bearish divergence. The candles have made a higher high, and the oscillator has made a lower high, as you can see labelled here. You'll also notice the classic oscillator has dots on it. These dots are greater identification of potential reversals. A dot appears when the histogram exits a dynamic overbought or oversold level. When I started recording this video, the price was just crossing the trend tracer and now it's up significantly. Looking at this price action, it was quite easy to deduce this would be the case. We saw a green dot on the histogram indicating a potential bottom in the market, and then the Taki Ashi crossed the trend tracer and we saw a sharp upward move in the price. We are also able to use the oscillator in a classical fashion. When the oscillator turns green, we can assume there is a bullish momentum, and when the oscillator is red, we can assume there is a bearish momentum. This can add confluence to our trading in this case, since the histogram turns green before the Taki Ashi crosses the trend tracer. Something important to remember is of course that the Taki Ashi candles are not the real close price. They are there to assist in your analysis and can give insight into retracements. Take this example. We see two shades of green. The dark green indicates a retracement of a trend without switching to red too early. This can help a trader really stay in a trade for the maximum amount of time possible. This is a very good combination of indicators you can use to create and reinforce your own strategies. It's an excellent method of confirming trends and can add confluence to your trading. So, thank you for watching. Don't forget to leave a like and subscribe, and feel free to leave a comment telling me what you'd like to see me cover in my next video.